Welcome back to the Fast Money Halftime Report. We just heard from the world's biggest asset manager, BlackRock. Let's get the outside-the-box take on what we just heard. Gary, what's the trade here?
The trade here, believe it or not, is BlackRock, the best managed asset manager in the world. Larry Fink and Rob Capito, these guys are constantly thinking ahead. As you just heard, it's going to be a very volatile year in fixed income. You want to be in the biggest and the best. BlackRock, the name to own.
Yeah.
All right.
I like that, and I think Curtis did a phenomenal job explaining the situation right now.
Absolutely. I want to move on here because there is...
I disagree.
All right.
I think if look,
somehow I knew you'd say that, Peter.
Job. If you want to look, just listen to me on this. Do not buy long-term U.S. Treasuries. If you own them, sell them. You will lose a ton of money in government bonds. The government has two options: they can default or they can print. Either way, it's going to be bad news for anybody.
Peter, I don't think BlackRock's going to hire you, buddy. So don't send your resume there.
He's got other plans in the future.
If you can't own, Peter, if you don't want to own dollars, you don't want to own euros, you only want to own gold. I mean, you have to have some assets in some other commodity other than gold.
I do. Who says I only own gold? I own stocks all around the world. I own commodities all around the world.
All right, we got. If I agree to disagree, gentlemen. For now, we want to move on because we have a lot of ground to cover here. A lot of confusion on Wall Street today on exactly how to position your portfolio for a rising rate environment. Barini saying buy energy. Goldman saying get long the discount brokers. Let's make some sense of this entire thing. Well, first of all, let's take a look at Goldman's post-Fed call. This is very interesting. Goldman saying today that they're upgrading the discount brokers, that their downgrade of the discount brokers not too long ago was predicated on the fact that they believe that interest rates would remain very low for a long time. Conversely, they're also saying to buy weakness in the home builders today, specifically D.R. Horton. Joe, what do you make of this?
Real quick, I'll take the home builder side of that. I agree with them with D.R. Horton. They have tremendous exposure to the home buyer tax credit. But when you're talking about the discount broker, Guy's been all over that story this year, done a phenomenal job with it. I agree with the note. I don't know if Guy still does, but he's been all over that one.
You know what? And I'll jump to the Home Depot side of things. If you want to sort of have a retail spin, just look at what's going on at Home Depot. Look at what Frank Blake's done. Look at the stock action. And then look at the recent upgrades. A lot of brokers are getting on the back of this line, and let us getting on the back of it, which actually sort of disappoints me. We might be late, but you know what? I still have some room on the upside.
Hey,
I'd be more likely to want to take the opposite of what Goldman is saying, because that's what they're probably doing. You know, I never trust when brokerage firms upgrade each other. And how could you possibly say buy a home builder unless you're trying to unload a lot of shares yourselves? I can't think of a worse business to be in right now than building homes.
Peter, I finally found something I agree with you on.
That is on the record and on tape, gentlemen. All right, don't go anywhere. Halftime Report continues right after this. Welcome back to the Fast Money Halftime Report. Do want to get to the poll of the day, and we ask you today, do you agree with the Fed's decision to raise the discount rate? A would be yes, the gradual removal of extraordinary crisis measures, or B, no. It's too early with the economy, employment, and lending on thin ice. Log on to fastmoney.cnbc.com right now, cast your vote, and do send us a fast message, fastmoney@cnbc.com. Well, totally devoid of flavor. That is how Domino's new ad campaign described its very own pizza. The company says it is devoted to improving its product. In terms of corporate candor, it doesn't get much better than that. Patrick Doyle is the new boss at Domino's Pizza. He joins us exclusively for his first national interview as the company's new boss. Patrick, it is great to have you with us.
Melissa, thanks for having me on.
We will get to the ad in just a moment, but first, we are a money show, so I got to ask you about input costs and rising commodity costs. We heard just in the past couple of days or so that Burger King has removed a slice of cheese from one of its burger products because of costs. I would imagine cheese would be a major input for you. Are you feeling the pressure?
Yeah, no, I mean, you know what? We've actually added cheese to our cheese pizza here since the beginning of the year, and really, you know, cheese has backed off a little bit the past week, but it really doesn't have long-term a big impact on our business. Near term, we get fluctuation. Long term, you know what? We just deal with it, and it really
don't hedge your costs in any way, do you?
No, we've got some long-term contracts on some of the commodities, but really we let it flow through.
All right, I want to ask you about this ad campaign. It's a very unusual tactic. Are you seeing any evidence that it is actually gaining? Because the corollary to this whole thing is that if you're saying your pizza is not very good, I mean, for so long you've been saying your pizza is good. Isn't this creating a credibility problem?
No, I mean, consumers are absolutely, they're paying attention to it. It's breaking through with consumers. The approach we took was to make sure that consumers understood that we were listening to them, and that we were making a change. You know, we've now since come out with advertising showing that, you know, in fact, we beat our major competitors in a taste test. So if you want the best tasting pizza right now, if you want a great tasting pepperoni pizza, you're going to call Domino's. And so the beginning of this campaign was all about getting people's attention, making sure that they understood we had made a change.
Right.
And we've now proven that it's better. And if we can get people to try it and give us a new chance, another chance on the taste.
Hey,
better you say and more cheese.
Can I ask you a quick question, Patrick? I'm sorry to jump in.
Sure.
I'm like Charles Van Doren and sequestered in quiz show here, so I don't see anybody. But when I was in college, Domino's delivers. That was a big thing because you really couldn't get it anywhere else. Now you go to the supermarket, and in the frozen food aisles, you can get some pretty good frozen pizza right now that I got to believe is making a dent in what you guys are trying to do.
Yeah, I mean, frozen pizza is better than it was 10 years ago. They had a period of growth. The growth you're seeing from frozen now is really more from price than it is from unit volume. So we're very comfortable that the convenience we bring of bringing it to people and the better tasting pizza that Domino's is serving is going to win out.
Gary.
Hey, Patrick, give us a hint of what's next. You've done a great job with this marketing campaign this summer, Memorial Day. What are you going to do in terms of bringing back additional traffic?
Yeah, well, Gary, I mean, first of all, we're proud. I mean, last year we had, through the first 3 quarters of the year, we had positive traffic each quarter, which put us in a very select group of restaurant companies last year. When you take that combined with the international business, which has grown for 63 straight quarters of same-store sales growth, and then the debt that we've been paying down, we paid down the first 9 months last year, $161 million in debt. It's powerful. So we've got people's attention. We've got a better pizza.
Patrick, we got to leave it there. Thanks so much. We hope to see you on Fast sometime soon. Patrick Doyle, the new boss at Domino's Pizza. We'll have the trade on Domino's in the pizza sector on the other side of this break. But take a look, meantime, as we go to break, at President Obama live in Las Vegas, Sin City, where he said before, if you're in a recession, you don't go spending in Las Vegas. There he is. Stay tuned. As you know, President Obama is in Las Vegas. Power Lunch will have all the breakdown, the analysis on his latest plan to help housing. Meantime, let's call the close. Gary, what do you say?
Continue, sell Dell.
Peter.
You know, Obama's right. People have to spend less. Unfortunately, his policies are encouraging them to spend more. And we have to spend less on housing, too. And his policies are going to do the opposite.
I think we fizzle out here, Mel.
Joe.
Folks, the tape tells you everything. It's a great tape. Buy it.
All right, we'll see you next week for more half-hour halftime report. And again at 5 o'clock tonight on CNBC World. Meantime, Power Lunch begins now.